Hello and welcome to Market Matters, presented by Max. I'm Joe Teague. This is Brian Stutland. Say hi, Brian.
Hey guys, how you doing?
Did you have a good weekend, Brian?
Yeah, certainly was. Just heading into Thanksgiving week here. It's usually a de-stressor time for me, at least. I know maybe not a whole lot going on, but definitely looking forward to some turkey. What do you got on tap for Thanksgiving?
Well, I wanted to ask if you caught that Lions-Bears game by chance yesterday.
Oh, man, I knew that was coming, right? Oh, God. Total collapse here, but by my Bears. But, hey, we got a lot to talk about in the show, right, Joe? So we should probably get into it. People want to know what's going on in the market, although it is a shortened week. There's a lot going on. We got a number of items we really want to hit up on when you take a look at, maybe show up what's up on the lineup here for the show. Take a look at what's going on with Microsoft OpenAI. We're going to be hitting up that as a number one category. It's like mutiny on the bounty over there, Joe. I don't know what's going on. All of a sudden, a letter of 600 people wanting to defect if the board doesn't resign. So we got to definitely get to that. Obviously, still a lot to digest. Last week, we talked about inflation rates, CPI numbers. That came out. The market rallied huge. So what's going to happen next? The Fed's probably going to go on pause for a little bit here, Joe. So it should be something interesting to look at. We're also got a trade for you. Nvidia earnings tomorrow after the close. Stay tuned on our trade on that. Along with a recap from last week, I hit a home run. Got to give props to myself here. SPY trade. We'll update you on that trade. What's going on? We got questions for you with final thoughts. But Joe, what's going on this week for the markets?
Yeah, it's a shortened week, as you mentioned. There's not a lot of earnings, and this is how the market's looking at the earnings shaping up this week. All eyes are on Nvidia. That's the only thing the market can see right here. That's all anybody cares about. Yes, we do have Zoom, Lowe's, Hewlett Packard, and Deere. So not a lot, but Nvidia is the big one. It has been, one of that magnificent seven, up 240% this year. It is the big honcho, and it is what people are going to be watching, and that will be the market mover. As far as economic news, we also not a lot. Again, it's a shortened week. We had big data last week. We do have the Michigan consumer sentiment that's coming out Wednesday. I think Michigan sentiment will be really critical on Saturday. I think that big game is going to be a lot more important for the market. Perhaps maybe we'll get into that a little later. And last week we were talking about the consumer or the stock market sentiment. I had mentioned this has been shifting bullish. We're another shift bullish. We're now 2 weeks of fairly heavy bullish sentiment. As far as the contrarian indicator, it's not giving me a lot to say. It's not overly bullish. We're not at that 52-week high. Again, that's about 52. We're at 43 on that bullish sentiment. So it's not a screaming sell signal in terms of a contrarian. To me, this could just be a continuation of the trend, continuation of the melt up. That's what it kind of looks like to me where we are. But that said, sometimes you get 2 or 3 weeks of these heavy bullish indicators that can be kind of the end. So let's go. Let's go get into Microsoft and this crazy story of OpenAI. Brian, what do you have from there?
Yeah, I mean, when you look at what we've heard over the weekend, Sam Altman basically was out and out. The board wanting to, basically kick him out as CEO. They named one potential interim CEO. Then they already came up with the former CEO of Twitch to move in there. Then now we're seeing information. This just hit out on the tape, actually, when I was looking at my newswire before we got on the show. There's about 600 employees at OpenAI that have signed a letter that if the board doesn't resign, they're going to Microsoft and they're going to join Sam Altman there, which Microsoft has said now. They're bringing him over. So really a lot to go on. But what's interesting, Joe, the stock, Microsoft itself, up about 2%. We know last week it was down. I wonder if there were some rumblings that Sam Altman was on the out and out, and that's why the stock was down at the end of the week. And now all of a sudden the stock is railing, hearing that he may come over and just move himself over to Microsoft and probably bring a whole lot of the team with him. What do you make of this?
Yeah, I think that announcement came out right before the close on Friday. The stock got hammered right on that news that he was out. And then now over the weekend, the news that Microsoft is bringing him on. It really is fascinating to me. It seems like the board over just had some sort of grudge. And it seems like all the people that worked there, you talked about that letter. They loved Sam. They wanted him to stay on. And Microsoft is just saying, we'll take him. We'll put him on our staff. We kind of own AI, but we don't have to necessarily pay them all the money we promised them or invest all the money we promised. They had $10 billion allocated to them. Not all that's gone there. So, Sam can still do whatever he wanted to do. And he could potentially bring over the vast majority of that company just under his wing there. So it seems like the board just kind of overplayed their hand and really made their company kind of, null and void essentially if they don't bring back Sam, or they may have to just bite the bullet and lose their job. So for me, Microsoft, that's another one of the Magnificent Seven. It's really the market right now. It has dominated everything. We own it for our clients. We continue to own it for our clients. Up 2%, close to this 52-week high. I don't know if this is an area where we'd be looking to add today, but just as an area where continue to own. So for me, if I were trading Microsoft today, I would want to add to this position, but I wouldn't want to go here and buy these levels. I just want to sell a put. Sell a covered put, cash covered put. A lot of people say, oh man, Microsoft's amazing stock. I wish 12 months ago, I wish I was in this stock, for the past 20 years. Well, of course, but there's a way we can get in still today without buying these highs. We can just sell this cash covered put. We can sell this downside protection. We don't have to stay in cash. We can still earn money and participate to the upside while Microsoft is still going higher.
Yeah, I mean, I like that trade. It's sort of like we do this for clients, Joe. That structured note trade where there's sort of some break-even point that's down lower where you'd have to start to participate in the downside to the stock. But in the meantime, you collect some income waiting for that. Your cash can sit in a cash account side collecting interest as well. So you can really pick up some nice yields here. And Microsoft is the market. It is probably the future. They're gobbling up. They're going to gobble up their own investment on OpenAI. They'll probably gobble up other people along the way here, Joe. So I like selling a put. Yeah, chasing things at all-time highs is really tough to do. So maybe, you go maybe 2-3 months out, call it 10% to the downside, sell a put, take in some income. The annualized rate on a put like that is probably a little bit better than what you'd get with the Fed funds rate or short-term cash.
And speaking of Magnificent Seven, speaking of stocks close to their all-time high, sorry, I'm getting ahead of ourselves. I want to go to Nvidia. Let's go to the Fed. Let's go to the Fed and their interest rates.
Yeah, Joe. I mean, we talked about the CPI last week, how important that inflation number was. We talked about levels that had to hit. It came in below expectations. The market rallied just as we talked about it. So, Joe, you made some nice calls on that. What do you got for me on the Fed? What if they hold interest rates here? I mean, are you going to say this market's going higher if we're done raising rates?
Yeah, so the market's pricing that in. The market's pricing in the rate hikes are over. The market is essentially saying the next move will be a cut. Now, historically, when you do get a cut, you get when you do have the end of the hiking cycle, there's about 5 to 6 months of a pause. And then when there's a cut, well, this happens. This was the question week last week. You nailed it right on the button. When the Fed does cut, oh boy, that's not good for the market. So that's just something we need to keep in mind. Put this in the back of put this in our memory hole as we're going forward here. Now, these 5 months can be good before the market does cut, but when the economy kind of turns over, that's what we have to be looking out for. And again, we were talking about how this changed the landscape. So just looking at the prediction or the market of what the rates will be, would you look out into March of next year? There's a 28% chance that will be the first cut. So by the first quarter, we'll have a cut by the Fed. You look out into May, there's actually a 60% chance that there will be a cut. So that's kind of where the first cut is going to be. So we'll have to keep that in mind. That could be the start of a bear market, but that's just historically. So what could be different this time? So I'm just kind of thinking about that. Usually you see the unemployment rate start to rise. You see the inflation. Yes, that's cooling off for sure. Unemployment rate starts to rise. That's obviously bad for stock companies. It's bad for earnings. But maybe, just maybe, that transitory message the Fed was saying before the war, all 2 years ago, maybe that's going to actually was true. And a lot of it could have been COVID. A lot of it could have been the trade war, this supply chain disruption. Well, we're starting to get through a little bit of that trade war. Finally, we're getting a pickup of imports from Mexico. Again, we know that China's imports have fallen off a cliff. We're starting to see some rising in Mexico, also seeing it picked up in other Southeast Asian countries. So that's shifting. Now the next move is going to be into India, so that part is shifting where we're getting our goods from. And the other point I was making in our blog, if you go out and read it at the Ripple Effect, equityarmorinvestments.com, another reason why it might be different as well. Next year is an election year. There's a lot of political pressure for rates to fall. Of course, they want to keep the market going strong. Maybe this will fall a little bit quicker than otherwise would. And also, there's just geopolitical pressure for the rates to fall. And that's because the cost to service the debt is just going up and up and up. And you can see in this chart here how quickly these interest payments are rising. We're up over 200% in just 2 years on how much money it costs to pay off the debt. So that portion, that piece of the pie that goes in interest payments is just getting bigger. That's just going to put a lot of pressure to bring those rates back down to get things in order. So that's just two reasons why rates might come down differently than previously. Of course, anything is possible. Be watching it as usual.
Yeah. So Joe, I think with the spikes index volatility option price is cheap. It sounds like you're buying puts maybe 6 months, 9 months out, or at least looking maybe to do that in case this happens, because it seems like volatility is pretty cheap with the spikes as low as it is in the mid-teens now. It sounds like you'd be a buyer of puts in the back end or some sort of hedge protection for the back half of the next year.
Yeah, and I also kind of feel like the shift since that PPI is going to be that bad news economically is bad news for the stock market. I think that's going to be one of the themes we'll see going forward. But last year we were saying, bad news is good news. I think we're going to shift into bad news is bad news and good news is good news going forward. So finally, I wanted to jump into it before. Now we're ready for it. Let's go. Let's get into Nvidia earnings. This is the big kahuna this week. 240% rally this year. Brian, what do you have for me?
Yeah, this is going to be big. Let's take a look at the charts. Just jump right into it. You look at the stock price really over the last 3 to 6 months, and it's obviously a tremendous rally. But we have had some pretty good consolidation and a decent bullish move. You kind of see the little head and shoulders topping pattern that was made here sort of the last couple months. And then all of a sudden it looked like we were going to break down, and we failed to break that neckline. And when I see stocks do that and they fail to break this neckline and they rip back above the neckline and get above that support, they hit the all-time highs. Now we're actually pushing through all-time highs. So this earnings event really could be a trigger that triggers the stock, that range and take it up another level of, let's call it 50 to 100 points to the upside. So I still want to participate, and we're long Nvidia for clients. I still plan to do that, but I'm going to use a put spread to protect heading into this earnings event. Typically we see about a 7% move after earnings or so, maybe even a little bit more for Nvidia. So I want to protect in case that's back to the downside, back into that channel that we talked about. And this breakout to the upside was just, sort of a head fake. I'm looking to buy December expiration, the normal expiration, the 480, 430 put spread. So I'm buying the 480 put. I'm selling the 430 put. I'm going to pay a total of 13.25. You take a look at that break even, obviously down below the 470 mark on that put spread. So I do have to take losses on the stock from this point of 498 down to that break even point. But the put spread then provides me protection against the long stock position all the way down into that 440 range, at which point then I'm long stock again. And at least I've mitigated, let's call it, about half to a third of the move down after earnings, should that take place. But I'm only spending about 3% of premium option on the stock, so I get all the upside still, and I can stay long stock and sleep at night, because you look at the forward PE right there of 32. Look, if they guide higher, that forward PE is going to look a lot cheaper, and 32 is not that crazy for a high flying growth kind of stock. So it's not unreasonable that there's room for the upside here. It's just that if for some reason they're not guiding higher, I could see people saying, wait a minute, forward-looking PE may be a little too high, and they take the stock back. Again, about a 7% move. That's what the options are implying. That's why I'm doing a put spread, and I want to continue to hold this stock.
Yeah, it's a great place. Someone doesn't want to take any capital gains, got that nice protection. That's one reason to potentially do this. But we just know this stock has had massive earnings moves, especially this year alone. There's a lot of volatility around these events. It makes sense to me. Have that downside protection. Take the worst case scenario off the table. You sold that 430 put. I know, but you're saying you're happy to be long again down there. Take extra losses. It's fine because you'd want that to be extra long down there for sure.
Yeah. All right. So you ripped on me enough about the Bears, though. But how about what's next on tap? I think I deserve a little bit of props, right?
All right, Pat. A little pat on the back here. Let's talk about your SPY trade last year. Last week, if you're watching last week, we're going to recap that. We'll recap Brian's trade of Nvidia next week. So we'll keep this on tap. Something to keep focus for every week from us. And let's get into it, Brian.
Yeah, let's take a look at the S&P. This is the E-mini futures, the December future contract. That's, option traders like that, we like to watch the futures contract, see where that's trading. You can kind of see this nice, really defined channel to the upside that we've seen basically since the calendar turned November 1st. We have a nice channel here, getting some consolidation. I drew a red line right across where it kind of was bouncing off sort of this 45, 41 level. It was trading this morning a little before that. And actually, we broke now above the 45, 41. So if you look live, we're actually above this little red line. So we may be headed towards back to the upside part of that channel, get this Santa Claus rally going. As you recall, last week, I bought a slightly out of the money call in SPY. It was the 445 call. I would still stay long that call. I want to be long this in some fashion. I don't mind having my deltas increase. That's what happens when a call option becomes more in the money. It behaves more like the actual underlying stock itself. So I want to stay long that call. I'm not looking to take profits just yet. I think there's more room to run. I'm looking at that 4,600 level in the S&P as sort of a target before I look to do something else with these calls.
Yeah, it was kind of in this melt up phase. It's a feel good. I kind of want to wait and see what happens post this weekend. See how people are reacting to the Black Friday and Cyber Monday type shopping deals. If that's on, if that meets expectations, I think the Santa Claus rally will have more legs, like you said.
Yeah. All right. So one thing we do on the show, we love taking questions on social media. Feel free to write in anytime. We usually post our show that's going to go live for today. Right back to us. Ask us what you want to hear about the markets, whether it's a specific stock, the markets in general, sort of an option trade idea you might want us to discuss. We're happy to do that. We dissected one last week. So normally we'd have a question of the day, but it's a very important weekend coming up here. So I have a question for you, Joe. This is not necessarily an option trade. You're a household. Your wife went to Ohio State. Your family all went to Michigan pretty much. Who are you rooting for? Big game Saturday, Michigan, Ohio State. This basically allows somebody to get into the tourney in the postseason here. Who do you like? Who are you rooting for?
It's going to be fun to watch. There's just so much going on here. Michigan's drama this year has been entertaining for me as a Michigan State grad. It was amazing to see, somehow Michigan's controversy eclipsed Michigan State's controversy this year, which at the start of the year I thought would be impossible. So that's been entertaining for me to see. Historically, and I think I can say this because I don't think my wife watches this show. Historically, I root for Michigan. I was a Michigan fan growing up. I don't mind them winning. I'm not that kind of a Michigan State fan, so I'll be rooting for Michigan, although I'll be in a house of Ohio State fans.
All right, go blue, go blue. All right, what else we got?
Well, that kind of leads me to my Stump Brian question. I got a stump you. What was the last time Michigan and Ohio State played when they were both undefeated?
Oof. I'm going to go with, I can remember sitting on my couch. I'm going to go with 2006.
2006 is the
I think they were number 1 and number 2. Am I right about that at that point?
And
look at that, baby. What a
OSU
memory.
won the game. So if history is going to repeat itself, if OSU wins, I guess in October, which October of 27 was the top of the market there before the Great Recession. So October could be the top next year if OSU wins, and if Michigan wins, I think we're just going to have another 5 years of bull market, I guess, probably. Second stump question, bonus stump. Last time the Lions were 8-2.
Well, that was like 1964 or something like
1962.
that. Oh.
And in 1963, there was a 20% rally in the S&P. So There we go.
All right. I am a numbers guy still. All right, let's wrap it up here. We've had an interesting week. Inflation numbers, like we talked about before, big market rally. We're both, I think, on the side of Santa Claus rally potentially continuing, but volatility low enough here where you may want to be looking for some hedging at some point, at least in the back half of next year. Joe, happy Thanksgiving. We'll have more to go next week. This is Brian Stutland from Equity Armor Investments with Joe Teagay. Thank you, Market Matters, and sponsor from the MIAX on the show. We'll look forward to next week. Joe, any final thoughts?
No, if you got time, come over. I'm making sweet potato without nuts, so sweet potato casserole. So.
Yeah, no nuts. I'm allergic to that, so I'm in. I'm in.
All right.
Save me some.
All right, you got it.
All right.